Hello, are you there?
Yep, I'm here.
Okay, let's find another Asian range. Okay, right over here. Okay, now here. What do you see here? What do you see here? The price goes straight away up. Okay, see the structure, how the price is entering. Okay, and now what do you see? The price is overbought here. No, it does not seem overbought. Does it seem overbought, something like that? No. So what happens? The price just goes up straight away. Okay, here the price must be reaccumulating. That's why the price goes up. And now the price forms a fixed range, right? From here to here, that's what you can see. All right. And what you can see here, this pattern. Can you identify this pattern?
VCP.
Yes. So VCP patterns says what? What is should be the direction of the market?
To the upwards.
Upward. So it's bullish, right? So when
Yes.
we are entering the trading range, when we are entering the Asian session, we are actually bullish, right? Because of VCP pattern. Drive up, okay, range, and then you see VCP pattern, the price is entering up, okay, and then you go to the 5-minute time frame. Okay, here. Okay, now your entry should be only after 8 p.m., which is this one. Okay, this one. You have to understand a bit, and then it will start making sense to you. You just have to know how the price is entering, whether it's entering from the downwards, whether there is VCP pattern, whether there is, like a kind of built-up, whether the price is, like entering after jump across the creek or falling through ice. Got it? You have to remember these details, and you have to identify the direction before entering London session or before entering Asian session. Now you have to adjust your trend lines. Now this should be here. This should be here. A clear VCP pattern, right? And what do you see here? Can you do more things with this one? You just draw from here to here. Just a straight line. This one here. You see the price is doing what? Making a small range. Then there is oversold. You mark it oversold, right?
Yep.
Plus selling climax. Again, VCP pattern. We have this mini range within the VCP pattern before the open of Asian, before the Asian open. The Asian open at 8 p.m. your time. This one, 8. Okay. Now you have this opening, and then what do you have? I told you when you have within a range after oversold, you have this what? The price goes up. So this range after oversold should be what? It should be redistribution or reaccumulation.
Reaccumulation.
Remember, I told you that after jump across a creek, when we have a range, we say it as a reaccumulation. But how about after oversold when we have a range? It is also reaccumulation. Remember that, okay?
All right.
Because we have already the underlying strength in the background. So there should be reaccumulation. Got it? Go to the 3-minute time frame. Now we have all the points in our mind. We have reaccumulation structure, bias you already know. And now what do you have to do? Now, as the Asian session opens, and it's a clear VCP pattern you can see, even from a 3-minute time frame, right? Now, the price goes down. Okay, the price goes down, makes some multiple attempts. Okay, the price goes down finally. There is no volume, no goods volume here, but the price finally goes down at 8 a.m. You can see very huge volume. Why there is huge volume? Because at this time, the Asian market opens. And then the price immediately reverses. So what kind of pattern is this?
Bottom reversal.
2-bar bottom reversal, and it's also spring, right? Spring.
Yeah. Right.
Now, you don't need any further confirmation. You can directly enter. Do you need any further confirmation? No. Just enter. And obviously the top range should be your target. But I'm not just go for 2 hour and then exit your trade. That's it.
Sorry, the spring, right?
Hmm.
It must happen in a high volume,
Yes.
and it doesn't really matter if it's a bullish bar or a bearish bar, as long as we kind of know that it is accumulating or the biases will be bullish.
Yes.
Is it?
Yes.
Okay.
So this 2 bar bottom reversal is a spring. Why? Well, spring can be 2 bar or 1 bar. Spring is like this. For example, you have a trading range. Okay, let's suppose your trading range like this. Okay, one spring would be that the price goes down, and then goes up, and then closes like this. Okay, immediately reverses. This is spring. 1 bar action, like this one. The price goes down, and then goes up, and then close above. This is spring. Okay, and spring can also be like this. The first bar goes down, close below on high volume, and then the next bar also goes up. The next bar immediately reverse and close above. So this is 2 bar spring. We call this as 2 bar spring or 2 bar bottom reversal. Okay.
Okay, I understand.
Okay. And now we will just take a trade and just target the last high. Got it? And now already you know that once we target the last high and we have also broken this channel, what do we have here? This one should be what?
Trust.
A thrust trade. Okay. So after JAC, this is JAC, right? JAC of this pattern. JAC, right? Jump across the creek. And I told you after
correct.
jump across the creek, you can make another channel like this one. Okay. And this one. This is another channel after JAC. Can you draw like this? From
Yeah,
high
can.
to low. So this pattern is what? Reaccumulation, right? And after in the reaccumulation step, what do we observe? Spring. Take another trade and go up. Finish. Second trade if you want to trade. Do you understand?
Yes.
Okay, let's see another session now. Okay, 15 minutes. Just go before. Let's see if we can go for another session now. 27 July, let's go. This one here. A huge bar up. Okay, and then the price is doing what? The price enters right over here. Okay. All right. And then, all right, we see the price is just accumulating. All right. And this is the form we can form, right? We have a huge bar up, but do we see any kind of upthrust, something like that? Or any kind of, what to say, overbought in this move? We just saw that the price is just moving straight up, right? We have no further information whether the price is overbought or not. We have no information at this point. We just know that the price just go up and then the price is entering the range. It goes up, then goes up, goes down. So it started making a range. Now we have to figure out whether it's a distribution, redistribution. How will we identify? Right now, it's not easy to identify. So you go to 5-minute time frame and then readjust your channel. Now what you can do, you can see a straight up move, a very bullish move. Okay. A very bullish move. And then the price started reaccumulating and ranging, right?
Yep.
Yeah.
Right.
Okay. So just before London Open, what do we see here? That we are just having this kind of structure here. And this one here, the price is coming down, the price is going up. Can you draw a structure here? There's no need for that, right? Okay. But here we see just before London Open, just before New York, Asian Open, we see there's a small range at the top. Okay. Small range at the top. And the price just made an upthrust of it. this bar, huge volume. So obviously, what would be the direction of the trade?
Bearish.
Bearish, just short-term bearish, and exit right over here. This is our idea, right? So just go for it, short-term trade. Three-minute time frame, but you should notice one thing. Just before opening session, the price started ranging here, but what's happening before it? How the price is moving up? The price is moving to the upside, right? And below it, can you see any structure here? We have high volume here a couple of times. We have high volume here a couple of times. Okay. A normal structure would be, yes, we have short structure here if you want to. And then the price breaks through the structure, moves up. Okay. And the price started ranging. All right. And then after ranging, what do we have? Means there's nothing more. We are just in a fixed range, up and down, up and down, up and down, right?
Yeah.
Okay. No structure here. So what are you going to do with this? When you see the upthrust here at the open, so obviously your position would be just take a short trade. Okay, nothing more with that. And target the last low because it's upthrust here, right?
Seems risky.
Sorry?
Feels risky.
Feels risky, but when you see this kind of range here and there is nothing, no action going on, okay, right over here, there's no action going on. All right, you can just take the upthrust here. You just saw the upthrust and then the price closed below and then reversed. What kind of information do you get with it? Obviously, the price will come down and test this level. Okay.
Okay. But what
Yeah.
the safe entry would be after the bearish bar?
This one?
Yeah.
Yes, the safe entry would be after this. If this is a huge
Because
bar,
this would be like it will look like a two
yes,
bar top reversal, right?
yes, yes, yes. Asian session is a bit complicated. Okay. It's a bit complicated. So all we have a very, very straight range, going into high and low, high and low. And finally, during this, we have a fall down. You see? Okay, let's cover one more. So you just have to identify the immediate bias and see how the price is entering into the region. This one here, Asian session. How the price is entering. The price goes down, makes some swings, okay? And then the price started going up in this direction. So price is entering from the upside, right? And after it, once the price enter here, okay, what are you gonna do? You just start drawing the range. Now, what can you get from this range? Any information which you can get from this range. I just see a straight up move and then a range, and I don't know what's going on here, right? The price is just ranging. Go to the 5-minute time frame and see if you can see any important information. This is the range. Yes. So your Asian Open was here. Okay. The problem with the Asian Open is that there is no structure. You have to make a sense out of it. How the price is entering and what the price is doing actually. It will take some time for you to get accustomed to. So that's why London session and obviously New York session are the best one. But Asian sessions are very hard to trade, you know. Got it?
Yeah.
Okay, so what do I see? The price is just moving up. Okay, and then there's a range here, and after the range, the price comes down here. Okay, the price comes down here. You can see within range, and then the price started reaccumulating. Oh, the price started forming a range just before it. What this is the range I can see. This high, and this is a low, which I can see right now at the moment. Okay, now go to 3-minute time frame and see how my information plays out. Just a fixed range. What do I see here? Just a range out of nowhere, right? And here the London opens. And it's on a very high volume. It's on a very high volume. And you see the price is just having a mini range over here, right? And if you see, if you make this line of resistance, you see the price just broke up with effortless no result, a very huge volume. And then if you want to take a short trade, you can, but it should be very short trade. And our next reference level was this one, exit. Got it?
Yep.
Yeah, there's nothing much to do. And then what happens, you know?
On a high volume like that,
Mhm.
I would take a long position.
Long position
Yeah,
on this volume.
cause cause it looks like you don't know where is it gonna go. I don't know whether it's gonna go up or gonna go down, but you just
Mhm.
know it's an upthrust. I don't know. I feel that it's not enough
Okay.
evidence
Yeah,
for
yeah,
me
yeah.
to
There's
do a
not
short
enough
trade.
evidence to short your trade, right? Yes. So you can wait for it, and you can wait for this section here. All right. Up thrust. Okay, now it's clear, it's up thrust. And the price comes back and retests this region here. Okay. But now even when you miss this trade, you have to exit over here. Not enough information. Right? So yes, this can be very, 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 very what to say. Such sessions can be very important, but overall this session, it's much more better to take a long rather than short. Okay, because first of all, I see this kind of structure right over here. Okay, accumulation. Okay, this one oversold, comes back, testing, jump across the creek. Then this whole is an accumulation range. This whole is an accumulation range, but again, you know, it's very hard. And finally, it was actually an accumulation range, right? So now you decide whether you want to trade Asian session or not. I've just given you a overview. That Asian session has no structure. Are you there?
Yeah.
Yeah. So just tell me.
Sorry, what?
I mean, do you want to trade Asian session or not? After seeing this all.
I feel it's a bit too
It's a bit confusing, right?
unpredictable.
Unpredictable, yes. So that's why everyone, so people just trade the Asian session, they lose a lot of money, to be honest, because it's not possible to make up eggs. Because like the whole night, you see the candle bars here, you see how the bars are moving. See, these kind of big bars and then uncertain, you see, these big bars here. But as the New York session, you see the bars here, very much predictable. Can you see? And as the Asian session will come at night, you will see. After, I think, you see, and after 4 a.m. your time, you see the bars here. How do they move? Can you see? But from here, 8 a.m. your time, it becomes much more better. See? Can you see the difference in the bars?
Yes.
Now, okay, so in such situation, I do not suggest, okay, GU or Euro USD to trade during Asian session. Yeah, the most predictable asset during Asian session, if you want to trade, is gold. But the problem with gold is that if you do not follow your risk management properly, gold gonna ruin you. Gold is very dangerous. Gold can wipe your profits very easily. Okay, so you have to be very, very efficient in your risk management because gold is very volatile. Gold can move like crazy, in just few minutes. So if you're comfortable with gold, now just open the session. Now you will see. Okay, Asian session. Okay, starts here. You will see what's going on here. Just you see, this is very easy to predict. What I see is just a normal range. The price just makes a normal range. Okay, if you draw the structure here, from here to here, okay, the price breaks down, tested it, a reaccumulation structure, price breaks down, but then reverse, and then finally, we see this one as a last low, and the price starts moving into Asian range, right? So what do we see here? First of all, there was an overbought. After overbought, the price did move, complete a move, distribution is completed, and then the price moves up and down, back and forth in a range. And now we see spring, okay? After spring, we see higher low, and then some sort of VCP pattern, and the price is moving up. And after that, we see a built up. Can you see built up? Can you see built up? Built up is
It's
near
built
what?
up.
Yeah, it's built up near the resistance. So gold is much more predictable. So now you go to the 3-minute time frame, you will see how easy it is to trade gold during Asian session. Okay, see here. And now we also have this price coming off this one, right? Asian session. Okay. Now, if you just draw the structure again on a 5-minute time frame as well, you will see that we have a type of mini structure here. Okay. This becomes jump across the creek. All right, the price goes up and then the price started reaccumulating. And just at the London Open, just right over here, sorry, just at the Asian Open, we see the prices over here. Price comes down and breaks through it. Structure. We already know that the bias was already bullish. And now at the top, we would exit because we know that there is a kind of overbought here. So we can just exit right over here, the highest point to trade. Got it? And then finally, what happens? The price just broke through it and then starts going up massively. Do you understand?
Yeah.
Now let's go for another gold session. This one is completed. Now let's do this one. So gold one is much more simple to trade. Now you see, what do you see here? The price is coming down. Structure can be drawn from here to here, from the second low. We draw the structure. Okay. We draw the structure. 1, 2. Okay, draw the structure. There's some sort of, you can say SOT here. Okay, the price goes up. Okay, and I told you about this, right? The impulse wave, the corrective wave becomes larger than the impulse wave, right? So it's obviously this one should be buying climax on a higher volume, right? Buying climax, yeah. Okay. So the price just straight away went up, jump across the creek, and I
Buying or
told,
selling?
sorry, selling climax, sorry, selling climax. And after jump across the creek, what do you have? Can you tell me? This is JAC now. After JAC, what do you have? Accumulation, reaccumulation, or distribution?
Reaccumulation.
Huh? Reaccumulation. Correct.
Reaccumulation.
Reaccumulation. Correct. And now we have a reaccumulation structure. All right. And what happens? Now we have a reaccumulation structure. We saw a spring before. Okay. And then now we go to a 3-minute time frame and see how we can adjust it. See here. We have a reaccumulation structure. Okay. And price does what here? At this one, your time, 8 p.m. Okay. This one, spring, the price from spring before your structure goes up. Remember that? And obviously we have a spring, we can draw another line from here to here, right? And the price comes back. Okay. That's this region at 8. Now this is very clear way to trade. You know already what to do, right? So just take the trade. Simple. Nothing much to care about. Got it? And the price come back. This is spring. This is also spring. Okay. And now this is test of spring. You see? 2-bar bottom reversal. Comes down, shake out, goes above, test here. Effort versus no result. Right over here, you can go for another entry. Right?
Yep.
Okay. 2R. All right. Let's go for another one. This one is done. How about this one? The price goes up. Okay. Entering the range. How the price is entering? Okay. When you draw the structure here, just draw the structure before this one. Now, can you make a structure of this all? Whatever you see here, from here to here. So if I draw a structure, what I see is this one, that there's some sort of SOT here. Okay, SOT here. The price goes up and there's a high volume. This was selling climax here. The price goes here, right? Breaks the last high, finally, right? So this whole structure makes a reaccumulation. This is a sort of reaccumulation, right? We know that this is reaccumulation. Okay. And then after reaccumulation, what do I see here? VCP pattern, am I
VCP.
right? Very easy to identify. VCP. So now we know already that it's a VCP pattern. Okay, we go to the 5-minute time frame. Adjust our structure if you want to. Okay. In a 5-minute, this structure can be drawn much more accurately. Right? Okay. SOT forms here. And then we break through the last high here, this whole channel. Okay. And then price comes back. LPS, price again breaks through the channel here. The next line of support. So this is JAC, you know already. All right. This is reaccumulation. All right. And then once we have a VCP pattern, so all information and all of the clues have been collected. So what you do now? At 8, you have to see what happens at your time, which is right over here. So this one, and you comes near what? You comes near this line of resistance. If you want to just adjust it, this is one, and this is second one here, another range. This can be formed as a second range. Okay. And now the price is here. Okay. And we already know this is the entire VCP pattern, right? Okay. Now draw this from here to here. Structure. What happens with this London open trade? Sorry, NY, what to say? This Asian open trade. What happens? The price goes back here. Okay, at this one, 8 o'clock. And we already know that this is reaccumulation structure. And we are near the resistance, kind of built up near the resistance. And then the price goes down. We will not take this trade right over here that we cannot short it. We know that the structure is to the upside. Now what happens? The price goes down. Okay, here, reverse here, test here. This is spring, forms a spring. This spring, test of spring. You have a no demand. You already know what to do now. In this no demand, you just take a trade.
No supply.
Sorry, no supply. No supply, go to the upside. Simple. Just the immediate bias. And of course, I can see one more thing very clearly from here. A kind of SOT right over here. SOT to the upside as the price clears. Okay, SOT, and then the price breaks down. Okay, test here, goes down. But again, because the overall structure is what? Overall structure is accumulation, so the price will accumulate and go up. So you understand here, Asian session is a bit more complicated. For gold is little more what to say, you can predict for gold little bit, okay? But it's not as good as the London session and the New York session. This is very important to understand. Okay,
All right. Okay.
let's do the last one here. Now this is what? This is Asian session. We are just entering the Asian range here. Okay, so what do we see here? The price is just coming down. Okay, kind of redistribution. So distribution, the price goes down, entering into it, and then we see a huge one. So if we can draw a channel, if you want, a very narrow channel would it be? From here to here, from the channel. But I can see one more thing here. If I just draw the channel, I can see now shortening of thrust can be seen here. SOT. SOT, kind of SOT. Okay. And the price goes above it. And the price finally breaks through the channel. Okay, this is the information we have right now. So obviously this is what?
Reaccumulation.
Yeah, reaccumulation. Accumulation actually. Not reaccumulation, it's accumulation. Now, if I want to draw the line much more accurately, I can just draw from here. Okay, now it's much more better. You can see SOT, and the price just breaks it. Okay, price revolves around here, and then price finally breaks it. Because there is not much volatility. That's why you can see that the price is moving this way. Okay, then price finally breaks it to the upside at 8 o'clock your time, you see. And then after you see, when the price breaks it, what will happen? What kind of structure would it be? Reaccumulation structure. Now, what you have to do, you have to wait for the price to come down. This becomes a reaccumulation. And this is your entry opportunity right over here. Got it? This one.
Yeah.
Spring. Okay. Yes, it's a little bit hard. Any question?
No.
So now we have covered this. Now let's cover one New York session. Okay. NY session is easy. So NY session, you know, we have covered this last time. So let's cover another NY session from the last time. Let's suppose 3 August one. So what time does your
Can we do Friday anyways?
okay, all right.
Yeah.
Just this one, 3 August one. Okay. So your newer session opens at what time? 8?
Yeah.
Okay, 8. And your second entry time, your second opening time is this one, 9. These 2 times. Okay. Yes. So just before it, what are you seeing? The price is going down. Okay. And then the price is in a fixed range here. Right? Anything else you can see? Oh, why I'm seeing the GU. Yeah, it's GU, right? Okay. GU. Okay. So now tell me, what structure do you want to take? What you can draw? What I see here is just, first of all, a fixed range. Okay. Just before an open. This is a fixed range which I can make for the immediate bias. So I think I can do the price makes a waves here. So I can draw a channel. Okay. When it's not easy to identify a channel on this one, you can draw on this second one here.
What
Okay.
if I move my that bottom line slightly higher a bit?
This one?
Yeah. What if I yes then.
Yeah, that's fine.
So what made you think it's more suitable to push it down lower?
Push it down lower. This one?
Yeah, why did
Let,
you choose to
let me see.
yeah,
Why did I choose? Let me see. Yeah, I should have been here. Sorry, I made a mistake. Yeah, I should have been here. First reaction, second reaction, and then down. Okay. All right. Okay. Now tell me what other structure you can see. The price just make a spring, goes up here. Okay. And then the price goes in a straight line, right? And then just before it, what do you observe? This whole range. First, tell me the bias here. What is the bias?
bearish?
Why do you think it's a bearish bias?
Not sure.
Okay. What I see here, so how the price is entering. So if you just open the session here, okay, and then you will see that the price is entering from this pre-Asian session here. Just wait, hold on. This should be closed. Okay. So this one here, starting from here, the London session. This is the point where the London and New York session overlap. Right? Your London was here. So mark your London open. This is your London open, right? Okay. So what do you see? The price just started ranging after London open. Can you see? So what bias do you have? Right now, we don't have any bias. We are just neutral. Okay. We are just neutral. Sometimes this happens. We don't have any bias. So in this situation, I'm going to see what. Okay. So I shift to the 5-minute time frame. Okay. I see that, okay, if I draw the structure here, no, not much structure, not much to do here. All right. All I see here is this one. Okay. Some sort of SOT can be drawn here. All right. But SOT is not much clear. It's just like the price comes back to this range, comes down, rejected, and then at the last one here, the price makes what? Hidden upthrust. At the last point, hidden upthrust. Again, hidden upthrust.